Welcome to this video. In this video, we will be learning about accounting. This is a brief introduction to accounting. Our objectives are: state the purpose of a business, explain the term business financial concept, calculate the profit of a business, differentiate between bookkeeping and accounting. What do you think the aim of most businesses are? Think about it for a second. Aim of a business. Businesses are started with the intention of making a profit. This can only happen if there are strict protocols and controls in place for spending money. In order to make a profit, the money made from sales must be more than the money spent on running businesses, like paying rent, salaries, and other expenses. If in fact the owner has incurred more expenses than what money he has made, there would be a loss and not a profit. Business control or financial control means ensuring that the sales of a business are greater than the costs incurred by the business. A loss represents poor financial data. Businesses always want to make more than they are spending. Here is a way that we can calculate profit. This is the formula we will be using. Selling price minus cost price minus expenses equals a profit or a loss. Example, calculation of profit. Kevin has a business selling fruits in Marsh Harbor. He buys apples for $5 and sells them for $8. His expenses on a weekly basis is $50. If Kevin buys 20 apples last week and sold all 20, what would be his profit or his loss? Using our formula, we can tell that Kevin made a profit of $10. Here is how we did it. His selling price is 8 times 20. 20 represents the apples that he sold, and 8 represents the price he's selling them for. $5 times 20 is his cost price. $5 represents the cost he purchased the apples for, and 20 is representing the amount of apples that he sold. And in the question, it also gives us his weekly expenses, which is $50. So this is how you calculate profit. Let's look at bookkeeping and accounting. Bookkeeping is the part of accounting that deals with recording information. And you could be recording your sales, your purchases, expenses, and other business transactions. Accounting is the classifying, summarizing, and communication of financial data. It is the use of the information compiled by bookkeeping to prepare financial statements. These financial statements are reviewed and analyzed by users of financial statements to make decisions. And our two top financial statements are our trading profit loss account and our balance sheet. The purpose of bookkeeping and accounting. Businesses have to follow established procedures like bookkeeping and accounting in order to recognize if the company has made a profit or a loss and to provide information for decision making. Other reasons for bookkeeping and accounting would be to determine the value of an asset and liabilities, to provide financial statement or information to users of accounting information, to maintain proper financial control of a business. So, a bookkeeper records financial data. Accountants classify that data, they summarize that data, and they also communicate that data. It's time for us to recap. We have learned about the purpose of a business, and it is to make a profit. We have learned also about the term business concept and financial concept, which is ensuring that sales of a business are greater than the costs incurred by a business. We also learned how to calculate the profit of a business, which is using our formula, selling price minus cost price minus expenses will equal to a profit or a loss. We also learned how to differentiate between bookkeeping and accounting. Bookkeeping is the process of recording data. Accounting is the process of classifying, summarizing, and communicating financial data.